Now, I don't know what you think about this guy. I have my own opinions. He's not a doctor, but we treat him like one. He's not a climate scientist, but we treat him like one. He is the chairman of a very large company that I happen to think does some pretty cool stuff. And I'm going to show you that in just a second. But really, what I'm going to show you is I'm going to start with a goal of creating $11,000 a month in salary and not having to go buy real estate or buy gold or buy some big asset, but being able to do it by sitting behind your computer. And that's what I want to show you with this. So the goal is $11,000 in salary to make this happen. And that's monthly salary, let's call it. Okay. Regardless of what you think about him, the problem is today you have to beat inflation to get ahead. And I'm beating this drum about like you have to beat inflation because so many people think they have to beat a 2% inflation rate. And I can tell you inflation is not 2%. So you've got to be realistic with what's going on out of the market because I don't think the market's ever going back to 2%, frankly. And I'm going to show you that in just a second. The reality is that inflation's been running at about 11.1% for the last 4 years. But what I'm going to propose is a solution to sell covered calls or use synthetics to create income. I'm going to show you how to do that. So that's the goal of this video. Now, I did a video a few weeks ago now about what inflation actually was, not what they tell us it is, not what you might think it is, not what the news reports it is, but what it actually was like for American families, at least my family, right? And so I went out there and I said, okay, how much have my eggs gone up? Now, I went to ChatGPT and I had ChatGPT pull from all the sources out in the market. And it said eggs have gone up 84.5%. Well, that makes sense. Actually, I think they're a little higher, but I'll go with that. Gas up 37.7%. Now, this is in the last 4 or 5 years. Coffee is about 46.4%. Rent, 25.4%. Now, that's a big number, right? So, yeah, that has to factor in bigger than some of the other numbers. So, eggs is a smaller number, even though it's a big increase in inflation. And used cars, that's another big number. That's up 34%. So, when you average it out, it's about 45.6% or 9.12%. But when you actually weight it and you look at like what are the important things that have gone up, it's about 11%. I could do a whole video, and I did on it, so you can go back and watch that. It's on my YouTube channel. But 11.1% is the amount that you need to beat just to stay even. So let's talk about that. Here, I'm going to show you how to create income in 2 ways, and I'm going to show you a step-by-step process to do it. And I'm going to touch on what could go wrong a little bit. I can't go into all the things that are going to go wrong because things can go wrong for sure. There's no free money in life, right? But a couple things could go wrong that you need to be aware of. So let's get into that. First of all, we're going to start with a company called Microsoft. You already figured that out probably. And while this guy doesn't run it anymore, he's certainly a part of it. But the company is being run really well by a guy named Satya Nadella. Maybe it's Nutella. Anyway, Satya Nadella. These are the profitability numbers from Yahoo. And you could see pretty profitable, right? Look at that operating margin of 43%. That means every dollar they bring in, they get to keep 43% in profit. That's incredible, actually, for a $3 trillion company, too. And it's such an older company now, mature company, I should say. And then how well is management doing with your money, the investor's money? Well, you can look at it and you can see, well, return on equity is the number I always use for management performance, and that's 37%. I look for a benchmark of about 17%. If it's 37%, they're doing some things right over there at Microsoft. So we're going to use that as the stock that we like, at least for the midterm to maybe even the long term, to kind of build our thesis here to make $11,000 a month in salary. Okay. So the first thing we do is we look at what's going on in the market now, right? I would say it's the right stock in the right market that is how you should enter a stock. And right now, the market's green. I don't know if it's going to stay green, but the market actually looks like it's rolling over a little bit. So it's not a perfect market, and it's certainly not a perfect spot on the chart. But this is a longer-term position that maybe we're going to be able to protect ourselves, and I'll show you that in just a second. But right now, the market's green, so we have to play it like it's green, and everything is hunky-dory on that department. Now, looking at Microsoft, this is a weekly chart, and I've drawn 4 lines on this. So you can see this one line that is the descending line is a descending trending line, right? So or a detrending line. Okay, so you can see it's got a little bit of a recent detrend going on amidst a longer term uptrend. Okay, Then I've got at the bottom of it, let's go from the bottom up. That's like the recent level where it bounced. Now, that was a really bad week, really bad day. And so it went all the way down to that level and it bounced. Will it ever see it again? I don't know, but it's a level to know. And then we've got this more recent support level right around the $400. That's the second from the bottom line. And then we've got that upper line that I've drawn. Now, that is a breakout spot from what's called a cup and handle pattern. So you can see if you draw a sideways cup, you know, it's like a cup that you're looking at from the side, there's a little handle there. Now, the top of the handle is the official breakout. But if you look at the stock and we study it from a perspective of how's it doing, here are the dailies. Well, daily, it's not doing well. You can see, out of the last, say, 10 or 12 candles, most of them are red. So this stock hit a high around 440 and it's down trading around, I don't know, 416. We'll talk about those numbers in just a second. And so you could see a downtrend going on in that stock. See that red arrow? That's what I call the primary trend. And the primary trend in Microsoft is down. What does that mean to us? It means even though we like Microsoft long-term, short-term and getting into it, there's a way to get into it that we can protect ourselves so that we don't lose money in the short term, or we lose less short-term than we would if we just bought the stock and hoped that it went up. So there's a little bit of strategy that goes into doing this trade, but it's not just a trade, it's a longer term approach. And I'll show you how that shakes out in just a second. So you got that? You can see it's on a little bit of a downtrend. All right. Now, what we're going to do is we could go out and we could just buy the stock. So you can see the stock at 416.30. And if I do my math and I want to create income, I'm going to go out and buy a certain number of shares at 416.30, right? We could go out and buy the shares for 416.30. Then what we do is we're going to look for those calls that are on your screen there, and we're going to go out 28 days. That's the November 1st. Today is October 5th, something like that, or 4th. And so we've got 28 days for this to run. So this is a monthly call option. We don't like the action on this stock as far as it's going up, but let's play this with a little bit of protection to the downside. So what I'm going to do is I'm going to try to create the juice. Now, the juice is not the whole premium that you're going to be collecting. The juice is the time premium, right? The extrinsic value, the value of the option that has a component of time premium. That time premium declines. So you're going to be selling time premium, which means that part that you sell, everything that you sell comes into your account, but the amount that you always get to keep is the juice, the time premium, all right? And that time premium is shown here as time value. And so if you look at the time value on this screen, you can see the stock is at 416.30. And if I want to go, I think that $400 number is a pretty good spot to sell calls. Now, those calls are selling for they're selling for $24.25 to $25.25. That's the bid and the ask, the wholesale and the retail price. But you're going to split that and figure, it's going to be somewhere in between. So let's just figure it's, I don't know, $24.50, something like that. So $24.50 is the premium that we're going to get, but the price that we're going to get is going to be, for time value, is going to be, let's just call it $8. Okay, just to keep the math simple. So we got $24.50 and $8. Now, $8 is the number I want you to focus on because that's the amount of juice that you're going to use to figure out how much you're going to create. Now, what that means is $8 is a per share price, but $8 times 100 shares in a contract means each contract is worth $800 to you in income. Now, you're going to be collecting, and this is confusing for a lot of people because I do some in-the-money strategies that are a little unique, but you're going to be collecting $24.50, right? $2,450 for every contract you sell. But really, that's a lot of in-the-money amount. That amount I call the protection amount in case the stock goes down. Well, I think the stock is going to go up long-term, but you know what? Short-term, I think there's a support level here right around, just under $400 or something like that. So we're going to use the 400s. Got it? Okay. So now I say, all right, I need to make $11,000 a month. $11,000 divided by the $800 a contract means this is the number of contracts that I need to have every month to be able to collect that 11,000. So I say 11,000 divided by 800. That means I need to have, let's call it 14 contracts. It's actually 13.75 contracts, but we're going to say we need 14 contracts. Okay. So we're going to need to sell 14. That means we have to have 1,400 shares. Okay. Well, 1,400 shares at the current price of 416.30, 416.30 times 1,400 is $582,820 that you need to be able to collect an income of $11,000 a month. Are you with me so far? Now, you might be going, wow, that's a lot of money to put into one stock, or you might be going, hey, that's a small amount of money. Depends on who you are, right? For some people, this position of under 600,000 is reasonable. For some people, it's like, oh my God, I have nothing near that. Well, lop off at zero if you don't have anything near it, so you can use these for your numbers. But anyway, that's what it costs to buy the stock and sell the call, okay? So here's the math right here on what that would look like. And it's pretty good, right? So you get your $11,000. You're set. It's in Microsoft, one of the top, 5 stocks in the world right now, and it has been for a long time. So that's good. Now, but what if you don't have, under $600,000 to invest? Well, let me show you the second strategy that I have, and that's called synthetics. Some people call them leaps. You call them, far out options, whatever you want to call them. I call them synthetics because that's how I delineate, being able to replace the stock with an actual in the money call. So let me show you how we do that. So the way I do the in the money calls is I go out, let's call it 6 months. Got to make some assumptions here. So we're going to go out 195 days, which is just a little over 6 months. What I'm going to do is I'm going to look for something with a pretty high delta. Now, I like between a 70 and a 90 delta, depending on how leveraged and aggressive I want to be on this trade. So in this case, I'm going to look at doing maybe the 340s. Okay. So you see those 340s there? Those have an 87 delta. And so you can see an 87 delta, they're going to cost you around $90 to buy. Now we're going to buy this because instead of buying the stock and spending $416 for every share, we're going to spend $90 for every share. That's an in the money call. Now the stock has to go down to 340 for this call to lose a significant amount of value. It's going to lose not just time premium, but it's going to lose in the money amount as it goes down to 340. That's why we like to have it really deep. But here we have a $340 strike price on the call. I think that's pretty safe. We got an 87% chance of that expiring in the money. That's kind of what the delta means. That's what I use it for. And so you can see that's going to cost us $12.93 in juice. That's going to cost us. We don't get that. So we have to say, well, this is 6 months. That's about $2 a month in juice that over time, on average, we lose. Okay. Now the stock goes up, the delta goes up, and other things happen. But right now it's about $12.93. Let's call it $2 a month of juice that we lose. But hopefully we're going to make that up by doing monthly calls and collecting extra juice. So I'll show you how the math works on that. The contract value is $9,000. So for every $9,000 we spend, we get 100. We get to control 100 shares. Think of it like that. So we're going to go $9,000 times 14. And so that's $126,000 that we take out of our pocket to invest. Now, we're going to go back and we're going to go collect that same amount of income that we collected before by selling the 400s. And remember, we talked about that price being $24.50. So we're going to collect that same amount of income. So let's go over the math here. So the math is kind of similar to what we just did, and that is you buy 14 contracts instead of buying 1,400 shares. You're buying the 340 strike calls, which we just talked about, and you're only spending $126,000 to do it. Then you're going to sell those same calls against it for $34,300, giving you a net basis of $91,700. That's a lot less to spend than that almost $600,000 before. And then the income from the juice that you get is about $11,200 per month, and that's roughly a 12% ROI. Now, you're going to have to do some protecting if this stock goes below 400 and some trade adjustments. And there are risks to the downside. There are risks if you don't take care of making sure that the stock stays above your strike price, which is really the goal that we always want to do when we have a base position that is synthetics instead of a base position that's in stocks. The other risk that you may have is that you have a delta slippage, right? So as the stock goes down, your delta is going to decrease, which means as it goes up, you won't get as much as it comes back. So you have to watch that strategy that happens after this first trade or after you do a trade adjustment. So pretty good trade, right? Now, I do this all the time, and I like to think strategically about covered calls, diagonal spreads, leaps, selling puts, those kind of things, because those are the things that separate you from Wall Street, right? The big money Wall Street people that have all this money to be able to manipulate things. The only real things that we have is being able to read charts and use a strategy and a system, and also to be able to sell premium, right? Like I just showed you how to do in two different situations, either buying a stock and selling covered calls against it, or buying a in the money option to be your base position and selling calls against it and creating that income. Now, you just kind of walk through step by step with me how you create income. Now, there's a lot more to it than that. There's lots of bald guys on the internet, well, maybe just a couple, but they're out there talking about how to create income in the stock market. And that's great. I wish everybody knew about how to sell covered calls because I think it's a really great strategy. And I believe it's better than just sitting there and buying a mutual fund and being over diversified, or buying something and just holding it and waiting for it to go up. Sometimes they never do. So, I think you need to have a system. I think everybody should have a system, whatever it is. If it's a day trading system, if it's a covered call system, I have a system called the cash flow machine system, right? And a system has rules and strategies and tactics. It helps you build a trading plan. Most people don't have a trading plan. Do you have a trading plan? Most people don't. Like, what happens if the market goes down? What happens if the stock goes down? What happens if it goes up, sideways? When do you roll up? When do you do trade adjustments? All those things. My system is based around a philosophy where we try to shoot for a target of 2 to 4% a month. Now, you just saw me do that. On the stock, it was 2%. On the option, it was a lot higher, right? So our goal is to get those small wins. You don't have to do the synthetic. You can just buy 100 shares of the stock and sell calls against it, and you can create some great income. And hopefully you do it well enough that it starts to build your portfolio rather than just sitting there and hoping your stock is the right one. And this system, I've designed it to take about 20 minutes, maybe up to an hour a week, depending on how much work you want to do. But you could do it in 20. It performs well in all markets, especially I just showed you an in-the-money call option, right? And that means if the stock goes down $15, $16, you still have got a big cushion, right? You got a cushion all the way down to, what did we say, 391 in this? We've got something that reduces risk in the markets, right? In the down markets, if things go against you, and I'm not Nostradamus, I can't predict the markets, whether they're going to go up. I can try to play for the probabilities, and my system does show you how to get the probabilities on your side. It doesn't always make money, right? But it does always make the income. You always get the juice. You may not get all that in the money amount if it doesn't go down, but you always get the juice, that $800 per contract that we talked about in this portfolio. And then it's a probability-based system. I mentioned that. And the idea is to get the probabilities on your side, right? If you go into a casino, not that this is a casino, but if you go into a casino, the house has the probabilities that if you sit there long enough, those probabilities are going to be on their side, not on yours. So you've got to learn to be the house. This is how we do it. We do it by selling covered calls. We do it by selling premium. Now, let me just take a couple of minutes to talk to you about my system. And if you don't like it, fine. If you love it, great. Maybe we can do some business together. But here's the crux of the system. I've designed a system around my lifestyle. I like to travel. I've been to 72 countries. I like to cruise around the world and have fun, open up my laptop or my phone, and I do my trades. This is the ultimate financial freedom system, right? The idea is I just showed you, you can figure out a way to, if you have enough money, to put it away and just start to collect income. Now, obviously, there's some things you need to do, trade adjustments and all those other things that I talked about. And it's not perfect, but if you went and bought real estate, you'd either have to pay a property manager or you'd have to plunge a toilet at 2 o'clock in the morning and deal with vacancies and tenants and fixing up kitchens and all that stuff. There's no free lunch anywhere. So this is the closest thing I've been able to find, not to a free lunch, because I don't even want to say that, but it's a good system. And it's a system that has lots of rules and strategies, and it allows you to be completely independent. So I'm looking for a few more people this year that get it, right? They want to make money in every type of market. They want to create income and cash flow, and they want to spend their time living their life. Maybe that's you. Maybe you want to go out and live your life and not be glued to a computer, like so many people that I know that are glued to a computer day trading or watching the market and watching the ticks. That's not my style. I like to buy the stock, sell the call against it, and put in a couple of parameters on either side and then go off and do my thing. So one of the components that I offer in my system is a course, and it's called the Elite Course, right? This is my most popular course, and I think it's an incredible value, but I'm a little bit biased. But let me just tell you really quickly about it. If you don't know anything about covered calls, this is going to start with some foundational knowledge, but we quickly ramp you up and get you into the understanding of the options foundations, full analysis and strategy, and then we talk about fundamental analysis, technical analysis, so you can find out the right spot on the charts, what stocks to pick, pattern recognition, pricing options. We go into trading techniques, and this is more than just buying the stock and selling the call. There's single leg applications. We have the long call strategy, volatility, understanding the Greeks. Like, we go through the whole thing. I like to say we go an inch wide and a mile deep, rather than doing all these different strategies and just only going an inch deep. We want to go really deep. And then we give you some advanced tactics and strategies to implement in your own trading plan, because you will need a trading plan no matter what you do, right? So you want to have ability to react and be flexible in markets. So we have a section on market adaptations, specialized strategies. We go on and on. I got a ton of videos. I got a ton of bonus content in here. To me, it is an amazing thing. So here's what you're going to get. If you want to get involved in our elite course, it's a complete training to show you how to make 2 to 4% a month. It's 70, I think it's up to 80 plus videos now, quizzes, tests, to make sure that you really understand what's going on in the market and really going on in the course. It's from beginner all the way up to advanced. Of course, I have some super advanced stuff, but the beginner to advanced is really where you need to be. That's about 80% of the knowledge that you need. Actually, way more than the amount that you need to make money. But going into synthetics and the nuanced strategies around that is there too. And I want to be able to show you a proven system. So that's what you're going to get with this. I'm going to also throw in some bonuses. You're going to get all that stuff I just mentioned. Plus, I have some bonuses. So the first bonus is a mentorship call with me. A lot of people seem to like to talk to me, and I have some experience, and I get it. That's $1,000 value. I charge $1,000 for an hourly call. So I'll throw that into this whole mix here. Bonus number 2 is that you get another $500 off on any of my other programs. And I have lots of different programs on how to trade stocks, on how to do covered calls, just lots of different programs that I'm really proud of. But we'll get you $500 after you take this course against any of those. I'm going to throw in the rules of the cash flow machine PDF. Okay. Now, this is a rule that you can print out, laminate, put it on your wall. And it's got rules that tell you what to do and how to do it. And they're rules that you're going to start to adopt and adapt into your trading plan, which, again, I want you to have a trading plan no matter what you do. And then bonus number 4 is a calculator that we've built, and we're continuing to make it even better. And so the cash flow machine calculator is in there. All those 2 bonuses at the bottom are $1,000 bonus. If you add in all the bonuses, it's, an $18,000 course, which, comparatively, there's a company called Online Trading Academy. They charge $18,995 for a similar course. When you add all the stuff together, it's $21,495 value. I'm not going to charge you that. I want you to be able to make your money back very quickly on purchasing anything or investing in any of my courses. But I do have a deal, and it's $2,997, and that includes those 4 different bonuses. So I want to be able to offer you that today. I don't know how much longer I'll keep it up. I'll keep it up probably for a little while. But if you're watching this video right now and you're interested in doing covered calls, and you're interested in changing your life and creating a strategy to build a salary around the income that you have, the money that you have, and you want to learn a way to do it, to me, this is probably the best way to do it. If not, it's one of the best. If you want to get involved with us, it's the elite course plus the 4 bonuses. Today's price is $29.97. And I don't know how long I'll keep it up. Certainly, if you're watching this right now, you probably can get a hold of it. Click on the link below to do this and enroll, and then we'll get you the 4 bonuses included in the program. You could start watching the videos right away, and then you could start making income, as soon as you start to master what we've got going on, which shouldn't take you more than a couple of weeks. The whole program is designed to be between 5 and 8 weeks, by the way. So it's not going to take you a semester or a year to learn. You're going to learn the rest of your life, but you're going to really get the core of it starting at about 2 to 3 weeks and building up until about 8 weeks, where you really start to become a master at this. So listen, thank you for your time. Thank you for your patience. I hope you learned something today. If you get involved in this, I'll see you on the inside. If not, I hope you enjoy the next video. Take care. Bye.